Hi, I'm PNC Joe, and I specialize in the intricacies of commercial insurance. Business income insurance is a pivotal issue that keeps many small business owners awake at night. When an unforeseen event, like a natural disaster, forces a business to halt operations, the financial impact can be devastating. The challenge lies in understanding how this insurance can act as a lifeline by covering lost income, yet navigating the variety of policy options, and the fine print can often be daunting. Keep watching because in this video we will discuss these important topics. What is business income insurance? Why is business income insurance important? What does loss of income coverage mean? What are operating expenses in business income insurance? Understanding extra expenses coverage. What is civil authority coverage? How does extended business income coverage work? What is the period of restoration? And a bonus topic at the end. Let's go through these points one at a time. Business income insurance is a type of insurance that helps businesses recover from unexpected events that interrupt their operations. Imagine if a fire damaged a store and it had to close temporarily. During this time, the store would not earn any money, but it would still need to pay bills like rent and salaries. Business income insurance may help by covering the lost income and some expenses during this period, subject to the terms and conditions of the policy. Business income insurance is important because it can help keep a business afloat when it cannot operate due to damage from things like fires or storms. Without this insurance, the business might struggle to pay its bills, leading to financial problems. This insurance may provide the necessary financial support to help the business recover and resume normal operations, depending on the policy terms. Loss of income coverage helps replace the money a business would have made if it had not been forced to close. For example, if a bakery earns $1,000 a day and a fire damages it, causing it to close for 10 days, this coverage could help the bakery recover some of that $10,000 it lost during the closure, subject to policy limits and conditions. Operating expenses are the costs a business has to pay even when it is not making any money. These include things like rent, electricity, and water bills. Business income insurance may cover these expenses, so the business does not fall behind on payments while it is closed, depending on the policy terms. Extra expenses coverage helps pay for additional costs a business might have to deal with to continue operating after an unexpected event. For instance, if a clothing store needs to rent a temporary location while its main store is being repaired, this coverage can help pay for the rent of the temporary space, subject to the policy's terms and conditions. Civil authority coverage helps when a government action prevents access to a business. For example, if a city closes a street due to a natural disaster and businesses on that street cannot open, this coverage may help those businesses recover lost income during the closure, depending on the policy details. Extended business income coverage continues to help a business even after it reopens by providing financial support as it works to get back to its normal income levels. For example, if a restaurant reopens after a flood but takes a few months to attract all its usual customers back, this coverage can help during that transition period, subject to the policy's terms. The period of restoration is the time during which business income insurance will pay for losses. It starts when the damage occurs and ends when the business can return to normal operations. For example, if a store is damaged by a storm on January 1st and can reopen by March 1st, the period of restoration would be those 2 months, subject to the policy's terms and conditions. Valuing a business income loss involves calculating how much money a business would have made if it had not been interrupted. This usually requires financial records, such as sales reports and tax returns, to show what the normal income would have been. This helps the insurance company determine the correct amount to pay, subject to policy limits and conditions. Many people wonder how business income insurance is different from property insurance. While property insurance covers physical damage to the building or equipment, business income insurance covers the financial losses due to the business being unable to operate. Another common question is whether this insurance covers losses due to a pandemic. This depends on the policy details, as pandemics are often considered an exclusion, meaning they are not covered. The cost of business income insurance can vary based on factors like the type of business, location, and the amount of coverage needed. Always review your policy to understand what is covered and any exclusions that may apply. I hope this video has given you a clearer understanding of business income insurance and its vital role in safeguarding your business during unexpected disruptions. Remember, navigating the policy options might seem complex, but this knowledge empowers you to secure the right protection tailored for your business needs. If you have any questions or ideas for future videos, please let me know in the comments below.